he is back, but we got to talk about the Federal Reserve. I'm just going to come out and say it. Jonathan, the Fed's got to raise rates. Let's go up another 100 basis points.
Wow. 100 basis points. Well, I think that would.
All righty, folks, he is back. He has been gone a minute. He's doing big things, but we got to talk about the Federal Reserve because I'm going to have a different slant this morning. I'm in a crotchety mood. And I'm going to come out and say, after GDP came in at 4.9%, after pending home sales surprised to the upside, after new home sales surprised to the upside, job market holding in there, I'm just going to come out and say it. Jonathan, the Fed's got to raise rates. Let's go up another 100 basis points.
Wow.
Let's just whack this thing and get inflation behind us. What do you think of all that nonsense and craziness?
Wow. 100 basis points.
Yeah, let's just break the system.
Well, I think that would break the system. And I don't think we need to go that high. I mean, inflation seems, the economy is running hot, but I mean, inflation is
running hot, Jonathan. It was 4.9% GDP. What's above hot?
Remember the days when we used to get all excited about that? You know,
like, I know, right?
The economy is great. You know, now everyone's like, the economy is great. Oh no.
Oh, no, it's great. Whoops. Not too great. Stop that. Yeah. Yeah, it's pretty wild.
I mean, listen, I think I mean, I was reading the other day about this, and so it's funny. I think you're taking the opposite position that you usually take, and now I'm going to take the opposite position that I usually take.
Exactly. I'm just in a bad mood this morning, so I'm just going to have fun all day.
Yeah, I'm not in a bad mood, but I don't know. I did have a long illness, and maybe my brain has been affected by this. But I mean, listen. So, if you look at kind of like what's going on with macroeconomics, right? With reshoring manufacturing, with workers gaining more power again as a result of partially reshoring, but partially also the declining demographics, right? You've got fewer workers, these things are going to, I mean, I think essentially we have had, 30 years of artificially low prices in the US because of offshoring everything, right?
Yep.
And now it's like everything else, there's reversion to the mean and it's coming back. And I think it's got to, and the pendulum has always got to swing further,
correct,
right, before it comes back. So I was reading the other day, somebody was saying, maybe the Fed just needs to get off this 2% inflation figure, right? Like, who came up with that anyway? Where did that come from, right? It's just that we had artificially low inflation for such a long time that the Fed said, all right, 2%, that's our target. Yeah. But historically, it's always been about 3%, right? I mean, you're old enough to remember when and people still teach underwriting, myself included, where the long-term inflation rate is 3%. So that's how you grow your rents. I'm sure that, remember for the longest time in single family houses, the appreciation rate that you expected was 3% because that's what long-term inflation is, right? And so this, maybe the Fed is just kind of fetishizing this 2% figure. 3% inflation we can live with. And if we're at 3%, or I think we're getting close now, right? We're maybe 3.5 or something at this point.
I think it depends on which one you look at. CPI headline, I think, was 3.7 last readings.
3.7. Okay.
PCE core was 3.5, I think.
Right.
So we get another reading tomorrow, so we'll see.
Yeah, we're kind of in range, right? So
yeah.
I think I'm going to say, I think the Fed either should stand where it is or maybe go up a quarter point. But I think that we don't, what's to whip, I guess, in my view, 100 basis points for what? For half a point of inflation, I mean, right. If you take the 3% figure as what it ought to be, right? And,
well, there's some scary charts out there. There's one of the charts I've been looking at recently is the inflation chart of the late 70s. And it really was kind of it went up, it came down, and it came roaring back.
Right.
And one of the things so let's just get this clear. I don't think the Fed should go up 100 basis points. I'm in one of those moods.
He's being a curmudgeon today.
Yeah, I just said that. But one of the things I am significantly concerned about, and this is legit, is shelter inflation catching people by surprise. April, May, and June of 24,
Mm.
because we're mathematically set up for shelter inflation to roll lower. But where we're at right now, we could potentially roll into the spring real estate market with very little existing homes available.
Mm. Yeah.
And more importantly, builders are cutting back in a huge way, right? So they're blowing out existing inventory and they're stopping projects. So we may have a double whammy of not a lot of new homes and not a lot of existing homes into the spring selling season, which, it not only prices, but rents, at least in single families, could shock to the upside again.
Yeah,
It's a real concern.
but on the other hand, though, you do have a supply glut of apartments in a lot of markets right now.
True.
Right.
True.
So, and I think people will defer buying homes and they will rent instead, especially getting these nice juicy concessions for beautiful,
1 month, 2 months, 3 months
for beautiful Class A brand spanking new apartments in a lot of these hot markets. So, I mean, I saw some stats recently that were staggering. Atlanta, 11% vacancy in the market in Atlanta, right?
Wow.
And other markets with numbers not quite as eye-popping, but similar, talking like 9-10% in some of those markets.
And that's without new inventory coming on.
No, well, yeah, I mean, that's not hasn't accounted for the inventory that's in the pipeline, right? Yeah. That's currently right now. And they're saying that, the deliveries are gonna, what's in the pipeline now is going to be rolling out over the next 6 to 12 months. But there's not, because of where we are at the moment, there's not a lot of new starts and new, new permits being pulled right now. But we still have to roll through that existing inventory plus what's still coming. So it's going to be a soft market for the next year at least, right? As that gets absorbed. So I think that will lessen the inflation number that's coming off of single family homes. Where you've got still a very not a hot market because volume is way down, but a very strong market in terms of pricing, right? So I think those two things will offset each other in the numbers.
Yeah. The other thing we've got to talk about, and the thing that really shocked me, I was wrong. I like to celebrate when I'm right, but I was wrong this morning. Pending home sales were up. They went up 2.1%. Expectations were down 1.1%, and I thought they'd be down 3%. Dude, rates are 8%. Now cancellations are up according to Redfin, 16.6% or so. So we'll see how many of these pendings actually close, but 8% rates, people are locking up homes, man. This is wild.
Well, I mean, listen, if they're anticipating them going up even further, then
that's right. Yeah,
right. I mean,
psychology. Yeah.
And not only that, but I mean, you got to ask yourself. I mean, when I read articles about, well, nobody's buying homes because they don't want to give up their 2% mortgage. I mean, that assumes they're giving up a 2% mortgage, right? I think there's a lot of people who didn't refinance necessarily, right? Didn't get around to it, or just for whatever reason didn't qualify.
Could be.
Like I tried to refinance my mortgage, and they were like, "Huh, entrepreneur."
Yeah.
Like, no way. We're not giving you a more. I was like, yeah, I want to my mortgage is 10% of the value of my house. Doesn't matter, right? We're not going to refi you because so anyway, so I think that there are people out there who, or they bought their homes. There are lots of people out there who don't refinance, right? So I think there's some of those people, and there's always a certain number of people who have to move, job changes, family changes, whatever.
Yeah, I heard something yesterday. I just want to share. Have you heard about the 5 Ds for why people move? So the first ones are easy, right? Death and divorce, right? Those are the ones we always talk about. But diapers, diplomas, and what was the fifth one? Death, divorce, diapers, diplomas. I forget the fourth one. There's a 5th D in there somewhere.
They must have figured out how to make jobs into a D.
Yeah, must have been,
right?
Yeah, exactly. So. Yeah.
So
it's there's a lot of that's why transactions aren't zero. You're right. There's a lot of people out, and also people have 40% or so of single family homes have no debt.
Well, see, there you go. Right.
Yeah.
So a lot of those people, and if they're just doing the math and saying like, hey, you know, I'm gonna, I'm gonna, I can afford an 8% mortgage, right? Because I'm downsizing, or I'm moving to a cheaper market, or I mean, let's not discount that, right? When you're selling, your $1.5 million two-bedroom
Mhm.
apartment in Manhattan, and you're
Right.
moving
To
into, like,
Miami or whatever.
yeah,
Yeah.
or you're moving to a 5-bedroom house in South Carolina that costs you
Yeah.
$400,000,
You're
right?
okay. Yeah.
Yeah, you're okay. You're not even getting a mortgage, right? You're
Yep.
just paying cash
Exactly.
for that, right?
Exactly.
So
Yep.
yeah. And even if you
Yeah.
were, you're like, hey, my payment, it's nothing compared to what I was paying before. So,
Exactly.
um,
So I did remember the fifth D. It is diamonds, diapers, diamonds,
okay.
and diplomas, along with death and divorce. There we go, diamonds. But at the end of the day, the 4.9% GDP growth was really widespread, right? It was consumers, it was government, it was residential investment. It's pretty widespread. But I cannot see that being repeated in Q4, right? We're going to
Yeah.
come off the boil a lot, because again, we got student loans. It's just, but that
What,
four
what's,
nine, that's wild.
I mean, this is the mystery to me, is like, what is driving this right now? Because, people have burned through those COVID savings, right? I mean, they spent all that money during, on
Yeah.
plastic junk for their kids during
Yeah.
lockdowns, and like all that spending is kind of like that
Well,
that mouse has gone through the snake, right? And so
it's pretty
what?
wild. So I've been thinking about this, and again, I lived in a household where we were very much financially insecure. I remember my parents. I remember myself. I mean, one of my earliest memories, I found a dime and I thought I was rich. I mean, that's how poor we were, right? So I remember my mom in the checkbook trying to, rob Peter to pay Paul. But what I think is happening is I think a lot of households have mortgages below 4% or 3% or whatever they are. And that is the largest expense outside of taxes
Mm,
for most people. And what people don't really get is that's fixed. That's not going up. Yes,
yeah,
insurance and taxes could be going up based on where you live and all of that, but it's not going up. So over the last couple of years, we've seen rent inflation, we've seen all these things which are valid, but if you got that fixed mortgage payment, not impacted. Plus,
yeah,
we've seen true real wage growth. I think that's happening. Um, we see more people working from home, which means they're doing less driving to the office, less eating out, less this, less that. So I think the financial consumer, the average one, certainly the owners of homes, this probably is not true for renters, but they're just their income statement, income minus expenses, gives them more discretionary income. I think that's what's going on.
interesting. Yeah, I mean, and look, 65%, in spite of the multifamily bros out there who constantly want to tell you that nobody wants to own a house anymore,
Exactly.
home
Renter
ownership,
Nation.
yeah, home ownership continues to be 65%, and it is like, varied by 2 points in either direction
Yeah.
since World War
Very
II,
sticky. Very
right?
sticky.
So,
Yeah.
yeah, so if you're right about that, where the majority of Americans own their own homes and their balance sheets are good in terms of what they're paying for housing,
Mhm.
then they've got a lot of
Well,
money
I
to
think their
spend on stuff.
I think their balance sheet, without question, is great because the average net worth of average, not median, is over $1 million now. I don't know if you saw that.
Yeah,
1.06 is the average. Now that's obviously pulled higher by billionaires, of course. The
right.
median is something like 380. But I think the average American is wealthier today than they've been in the last ever, right? They've been ever, and if they have an income statement that is in better shape than most people get, that's what's happening
And yet we as a nation complaining more than
about
ever
everything.
about
Yeah.
everything. Better off than we've ever been, and less happy about it than ever
And we have
before.
lots of ways to tell people we're not happy.
Yes, exactly.
This is a lot of fun. Well, Jonathan, do me a favor. Where can people find you? Where can they get your amazing workbook, all that great stuff?
Well, yeah. So listen, I've got some new and exciting stuff coming up. You and I haven't really talked about that much, but I have completely overhauling my multifamily investment program. I'm
Mm.
working on that as we speak. I'm going to release this right before Thanksgiving,
I
and
like it.
with a big discount on the future price. You're going to get the entire course and 12 months of calls with me for just $1,000. And that is
Wow.
half of what that's going to cost in the future. We're going to do this special pricing for the new rollout. So if you
Nice.
want to get in on that, the best thing to do is get on my email list. And the way to do that is go to apartmentinvestorsclub.com and grab my free download there and get yourself on the email list. So
There you
I
go.
welcome you if you want to learn how to invest in multifamily, and a great opportunity is coming. I really believe.
Oh yeah,
Because of,
me too.
I mean, I think the storm is gathering, right? So it's going to be interesting for sure in the next 24 months or so. And if you want to be ready for that, now's the time. So apartmentinvestorsclub.com.
Awesome. Thanks, Jonathan. Take care.
Mm-hmm.